Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news the global economy seems to be settling back into a low growth phase on the back of a sharp rise in policy uncertainty in the US. But first, in the week ahead, we'll get our December trade balance update and data on building permits for January. And the first of the quarterly data sets building for our March 19 GDP result for the fourth quarter of 2024 will come in, this one recording the construction work completed in the quarter, all relatively minor. There will also be another full dairy auction on Wednesday. Internationally, the week will end with the US non-farm payrolls report for February, where a modest gain of 133,000 is now expected. They'll get also more US PMI data plus factory order data. Tariff action may well overshadow these, however. In Europe, it'll be all about the ECB decisions. Expect a 25 basis point rate cut there. And inflation updates. Australia will release its fourth quarter GDP results and trade balance data, as will Canada and China. Over the weekend, China released its February PMI data and it was not negative. Their official factory PMI shifted back to a very minor expansion, although that's probably being generous. Their services sector is also expanding, also minor. And minor as well was the rise in South Korean exports, much less than expected in February. This came off the back of the unexpected January slump, one that was deeper than first reported. Although South Korean export growth has been generally trending low for about a year, so have their imports, and that allowed them to report their second highest current account surplus ever. In India, they reported their fourth quarter GDP results, and those came in at a 6.2% rate, better than the 5.6% in the third quarter, but just missing analysts' exports of 6.3%. In the US, the widely watched PCE inflation level came in at 2.5% in January, down from 2.6% in December, and back to November's level. The US CPI rate for January was 3%. From a year ago, personal disposable incomes were up 1.8%, but personal expenditures were up 3%. So this isn't tracking in a favourable direction now. People will notice that and take household budget actions, such as increasing debt or cutting spending. When uncertainty levels are high, cutting spending is more likely. The sharp jerk in trade policy direction has brought sharp changes in American commercial behaviour. First, there was a large spike in imports, up 12%, driving their merchandise trade deficit to a mammoth $153 billion in January. That is an all-time record and by a country mile. And secondly, American wholesale inventories jumped in January, especially for consumer goods, which were up 2.1% from a year ago. Retail inventories rose even faster, up 5.1%. And the Chicago PMI, which was in deep contraction over the December-January period, recovered in February, but it is still contracting, just less so. And the Trump administration designated importing timber a national security issue, justifying new tariffs. They also said Ripple, Solana and Cardano would be in their new crypto strategic reserve, jumping the prices of almost all cryptos, including Bitcoin, and of course their own personal wealth. North of the border, the good Canadian data continues. This time it's their fourth quarter 2024 GDP growth, up 2.6% from a year ago, better than the third quarter growth of 2.2% and much better than the expected fourth quarter growth of 1.9%. Driving the rise was rising household spending, rising exports and rising business investment. Of course, things for the first quarter of 2025 are much more uncertain, although it will be interesting to see the echo of the Buy Canadian, Buy Americans movement on their GDP. Perhaps it will give their first quarter a fillip. Global air travel is rising fast. International passenger travel rose 12.4% in January from the same month a year ago. That makes it an all-time high, eclipsing pre-pandemic levels. Asia-Pacific travel rose more than 20%. Meanwhile, air cargo traffic rose 3.2% on the same basis, although up 7.5% in the Asia-Pacific region. And we should probably note that the coal price has fallen back to a 4-year low, and back to prices first achieved in 2016. And not only are oil prices lower, there are falls too for zinc, lead and nickel too, all core components of global factory demand. Lithium is also having trouble getting back up off the Kansas. The US Treasury 10-year yield is now at 4.20% and down 3 basis points from Saturday at this time, down 22 basis points for the week as risk aversion takes hold. And the price of gold will start today at just under $2,857 an ounce. That's up $12 from Saturday, but down $81 from a week ago. And oil prices are little changed at just under $70 a barrel in the US, while the international Brent price is still just under $73 a barrel. Both prices are $1 lower than a week ago. And the Kiwi dollar is now at 55.9 US cents and down 10 basis points from Saturday. That's a 160 basis points drop in a week. Against the Aussie, however, was still little changed at 90.2 Australian cents. Against euro, were also little changed to 53.9 euro cents. That all means our trade weight index starts today at just on 66.2, unchanged from Saturday, but down 100 basis points for the week. And the Bitcoin price started today at $91,401 and up a net 9.2% from this time Saturday on the US crypto reserve news. Volatility of the past 24 hours has been high, at plus or minus 3.6%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.